GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we go harder for crypto than Kobe went to practice. Sorry, Smush Parker. It's Saturday, February 22nd. I'm your host, Jay Hamilton, and today we've got the Milk Road Pro team back at it again. We are going to talk about the Fat App thesis. Now, this thesis looks at where will value accrue in the future within crypto. Will it accrue to the blockchains and the protocol layer, or will it accrue to the app layer? We're going to break that down and talk about how you can frame your investments now and more long-term to take advantage of this thesis. We also discussed this thesis yesterday with Avichal in that chat. We're also going to talk about today what matters more to investors right now in this choppy market. Should you be paying more attention to fundamentals for your investments or more to pumpamentals? Great discussion there. We'll also talk about which sectors are likely to outperform throughout this year. Now, this episode was recorded on Tuesday and released to Milk Road Pro members then. If you guys want to get access to this episode every week, early in the week, you're going to have to go pro. Otherwise, you can wait until Saturday when we release it to all of you guys for free. Before we jump in, guys, some really exciting news. I want to connect with you guys more on a personal and a regular basis. And so we've started a Telegram group. We got a Telegram group. You can hit the link in the show notes to join now. We're going to talk about what guests we have coming up, give you guys an opportunity to give insight into which guests we should get on the show, what questions we might ask these guests. So please join the Telegram group. You get direct access to me and the rest of the team that makes this show happen on a daily basis. And of course, we all need a little support sometimes in our investments, and that's what we're here for, to help each other out. Also, today's episode is brought to you by crypto.com, my favorite crypto card with no annual fees, lots of perks, lounge access, depending on which card you're at. If you want to check it out, hit the link in the show notes. Check it out today. Without further ado, let's welcome the Milk Road Pro team.
All right, gentlemen, we're back for another pro research meeting. The four of us here to chat it out on the Milk Road Show. Going to be another fun session. What's going on, guys? How's everyone doing?
Doing great.
Good. I like that.
Yesterday was family day here in Canada, so I got to hang with my fam, my wife and my little guy. It was beautiful.
I worked.
It's good thing somebody was working.
Yeah, I kept the machine rolling. No, I'm just kidding. Well, we've had a wild week since we last recorded, and so I think we got to first start on. I mean, obviously everyone knows about what happened in Argentina and the rug in the meme coins, and since then, just meme coins are taking a complete dump. If you're on crypto Twitter, you're seeing. I mean, I tweeted out, if you're in memes, pivot to fundamentals, and it was my best tweet I think I've made in weeks. So people are really, I think, catching on to this new narrative or this new vibe of, all right, we got to get out of these meme coins. It's time to go to fundamentals. And so we'll talk a little bit about if that's going to, that's actually going to be a thing. But first, let me just pop up on the screen here. I think the biggest issue that came out of this so far is people are getting out of Solana and are a little bit scared because, I mean, Solana, 80-90% of his activity is meme coins. Meme coins are getting shit on now. Everyone's kind of losing their mind. And what's the vibe? What do you guys think? Is this an issue for Solana? Do we think meme coins are really actually dead here? Or is it just like short-term noise, like what typically happens in crypto? Anyone have a strong opinion here?
For the sake of meme coin investor backs, you should have tweeted a little earlier.
Yeah.
Well, I think it's just a market noise, and people will always find a ways how to gamble. And meme coins are, now they might be going downwards for a little bit, but then when the sentiment changes again, I think that meme coins will gain a lot of attention again, and the prices will reverse and go up again. So it's just short-term noise. And like, if there would be something troublesome with, I don't know, Solana client or Solana Foundation or something like that, that I would be paying attention. But, nothing's going on. Even contrary, like on the flip side is the new client for Solana, Fire Dancer, is pretty close to be fully launched. So, and even if we look at the activity on Solana, it's still like doing quite well. So I wouldn't mind to really kind of bother about this price correction.
But if there is about 80% of DEX volume for meme coin trading, it could impact the Solana price quite a bit, as it already does.
I just don't think that meme coin trading is going away. You know what this feels like to me is, you know, when you wake up on a Sunday morning after a big night of drinking and you're hungover and you're like, all right, I'm never drinking again. And then like by Wednesday, you feel good. You've gone to the gym. You're feeling good again. And you're like, all right, I'm going to open up a bottle of wine. And then by Friday, you're deep into it again, right? This is the college life, like on repeat, right? That's exactly what's happening here with meme coins. These are degens at heart. All they want to do is trade and speculate. And I just think this is short term. I got a feeling by the time this episode goes live, so we're recording on Tuesday, and this goes live, I think, on Saturday for like the public. I would imagine this candle in Solana that I had up on the screen there, where it's below sort of that trend line, I think it's reversed back up and probably I don't know if by Saturday, sentiment's already back to normal, but I think this is very, very short term. And I think meme coins will have its moment again. Like, I don't think every meme coin goes up, and I don't think meme coins, I don't really love meme coins myself. I think especially what's gone on here has been really frustrating. But degens want to trade and speculate, and so I think this is going nowhere. And I think Solana is going to be completely fine. Something new will drop, and people will trade it and go crazy with it. And this doesn't go away. It does not go away. Just like college students don't stop drinking, even though they wake up hungover thinking they might.
I think Joe McKinnon, or whatever his name is, the founder of Asymmetric Capital, he shared this chart. Joe McKinnon, yeah. He showed his chart that people spend more money on gambling than on investing. So it's telling you the story, you know? They will always find a way how to gamble, and yeah.
Yeah, meme coins aren't going anywhere.
No.
But when $4 billion gets erased from the crypto markets, seemingly like happened in 5 hours or something like that, like then there's a lot of pain, and but people are upset about it.
That happens all the time in this space. Like, what was it, 2 weeks ago or 3 weeks ago, we had a liquidation of more than that, right? Yeah. When ETH took that crazy dump, I'm pretty sure the Trump and Milena situation was more than 4 billion that was erased. So like, I don't know, Terra Luna was 40 billion. That one took a lot longer to come back, let's say. But I don't know. I think this stuff just continues to happen, and something else will come out, and we'll continue on. I mean,
to me, I mean, you've got a scary situation in Argentina. You know, that's for sure, right? Like with a president who made a grotesque decision that is probably going to ruin his presidency and his career, right? Like, what was he?
That's a bit much.
You don't think so? Oh, I think so.
I don't think this will matter at all in 2 weeks.
Oh, wow.
I hate what he did. Don't get me wrong. I think it's stupid and ridiculous, but I don't think he'll have any repercussions for it.
Oh gosh, I hope so. But I think, to me though, what stands out is, as you said, a gambler is going to be gambling. That's not going to end. There's going to be more of these. We're not even in mania phase yet. We're not even where we could be in this bull cycle. Like, I think this is going to happen again and again throughout this year, and only going to get worse. But at the same time, I also really buy into the thesis of meme coins are a way to capitalize attention, and attention is only growing in the digital world. And so we're only going to capitalize that more. So I think meme coins have got a long way to go, and I think have an incredible future. Yeah.
And I think people got to remember that the younger generation, this is what they do. They love to gamble. I was at a bar on Saturday, and it's like a new country bar that opened up where we were, where I live. And I walk in, I'm like, oh my God, everyone here is like 20 years old, not even. Like, they're all wearing hats on the top of their head. And like, I was like, this is weird. We got to go. But one of the people I was with like celebrated. They put their hands up and like screamed. I forget what it was for. We were having a conversation, and some kid comes over and just taps his shoulder and goes, "Oh, did you just win a parlay?" And I was like, what the hell are you like, parlay? Where did that even come from, right? Like, but this is what they do, right? The kids, they were all on their phones just sports betting the whole time that we were there, because there's a bunch of sports on that night. And I was just like, man, this is just what they do. Kids and this younger generation, they're going to speculate, they're going to gamble. This is what's fun for them, right? They can do it online, they can do it instantly. And meme coins is a big part of that. And so I don't think this stops. I think Solana will continue to do well. And also, like, Solana has a lot more going for it than just meme coins. Though I do understand what you're saying, Adrian. Like, it is the bulk of the activity right now, which is why it's seeing a big dip. But I think everything will go back to normal.
I gotta extend beyond that too. Like, the whole world loves to gamble. It's not just like the younger generation. It's just the younger generations.
True.
Like, that's
They just do
probably
it
who's
more.
gambling on meme coins, right? Like,
Yeah, yeah.
let's be real. Like, it's like 20-year-old men that are gambling on meme coins, right?
Yeah.
But what happens
Boys.
when Doge gets an ETF this year, which I think is likely, and Wall Street has to learn about meme coins, and the biggest gamblers in the world have to learn about meme coins? I think they will also start gambling on meme coins. I really think, like, we're just getting
I don't know about that one. I don't know that.
I know you disagree with that one, but I really
don't know that
think that will
big
happen
institutions are going to be investing in this kind of stuff. I really don't think so.
so.
We'll see. But I do think what is nice about what's happened last week is there has been a lot of talk about fundamentals, and like, it's pushing a few people over to fundamentals now, right? Like, people are rage quitting meme coins. Some people, and it's just nice to see fundamentals get its moment on Twitter for a little bit here. And so, like, that is ultimately a good thing. The question I think we always have, and Martin just wrote a pro report on it last week, is, do fundamentals actually matter in crypto? Right? Do they make a difference? And so, Martin, I know you wrote a little bit about it. If you want to give just a TLDR, we can have a bit of a conversation on this topic too.
Yeah. And also, like, because you are talking about meme coins, so you might be able to wipe out your account completely, I don't know, once, 2 times, and then you might just sit down and say, like, okay, what the fuck am I doing here? Let's look at serious things. So what is available here? So, like,
right. It is a journey for people. People usually get in shit coins, and then it's usually the next cycle, though. They come back like, all right, I'm going to invest in something more fundamental and, like, hold on longer, not trade. But
then if you think about, if you are a liquid fund and you are trying to raise the money, it's much easier for you to go to potential liquidity providers for your fund and show them that you are using fundamentally basis approach rather than, we are buying meme coins or whatever, because it's something that people can get pretty easy familiar with, and, like, it makes sense to them, right? And also, like, the more people, the more sophisticated players are coming into crypto, the professionals in terms of portfolio management and stuff, they are coming from traditional finance. So they are bringing their own kind of expertise and knowledge from that world and bringing it here, because no one is really applying, like, these traditional approaches here in a big way, like deploying billions. No one is doing it. And that's why this is the opportunity for them too, because people don't know how to do these things and they are just speculating. So I feel like it's better for LPs to raise more money because it makes sense that you are fundamentally driven. All the managers that are coming to this space are going to use that approach that they were used to do in traditional finance. It's also looking at fundamentals, trying to project the future cash flows. Also, the people who got burned a couple of times because trading some bullshit, now they might be kind of already, they learned their lesson, and now, okay, so let's figure out what's really working here, what's making some sense in terms of, if I'm serious investor, what should I invest in? So, like, it's just bringing me more points where I think we are hitting the point where fundamentals will really start to matter. And and also because I feel like DeFi is probably the primer sector, which is with the strongest fundamentals these days.
You said that at the perfect time as I shared my screen to show DeFi's fundamentals. That was wild. Anyway, continue.
And my point was that DeFi fees, or like fundamentals for DeFi, were very volatile over the last years. But now when we see like Coinbase and Revolut and like everyone is tapping into the crypto, and they will eventually start to use some of the DeFi apps. So the people will not just, come in and start to use it, and once the bear market hits again, they will just leave. So I feel like a lot of pieces putting together, and it's starting to feel like, okay, I believe that fundamentals will have a good year, or not just the from like year. I mean, like from now on, fundamentals will matter more than some people realize?
Well, for a few reasons. One, when institutions do come in, because now the regulatory framework is allowing them, they also, so one, because that's typical to them, they want to do their revenue analysis, et cetera, but also they want to deploy lots of capital, not a small amount of capital. And most meme coins, they can't deploy any capital in because there's not enough liquidity, right? Because like 70% of the token circulation is held by one wallet, right? And so they actually just can't deploy a lot of money into a lot of these meme coins. And so as bigger capital comes in, they just have no choice. But what was cool was Martin did a pro report last week, and he looked at, you can see up on the screen here, this is the revenue of most of the largest DeFi protocols in crypto. And if you looked at, track the price of their tokens, it followed this almost perfectly. Now, not to the extent. So in 2024, DeFi revenue went up 218%. The tokens went up 100 and something percent. So it didn't match it exactly, but that's okay. In the short term, that never really happens. But it followed it quite a bit. So like as like the start of the year in March 2024, we had a huge jump in DeFi revenue. You saw the tokens jump, and then we had that lag out where revenues went down, so did token prices, and then it had a huge jump again. So like you're starting to see tokens actually track their fundamentals, which you could consider revenues. And there's other things that are fundamentals as well. And so it starts to be a little bit more predictive, which I think is huge for a lot of people who want to invest and not just gamble, right? And so if we think DeFi revenues are going to continue to grow, then at least from what we've seen over the last year, the tokens are probably going to grow as well along with that. If we look at the best performers year to date so far, and I know it's only been a month and a half or whatever we're at now, it's basically fundamentally strong tokens. Hype has done extremely well, which has just increased revenues, increased market share, increased user base. A lot of the DEXs have done pretty good. Radium, Jupiter, et cetera. They've obviously done really well off the backs of meme coins, and they're generating a lot of revenue as a result of that. If you look at the last 7 days, who's the best token? Maker. That's what we talked about. Was it last week or 2 weeks ago?
Wow.
We talked about Maker.
Throw that down. Look at that.
Maker's crushing it.
And oh, geez.
I think we're almost we're almost at what, 9 billion. We're about to hit 9 billion in supply. When we talked about this, was it last week or 2 weeks ago? We were like below 8 billion. This thing's just crushing it. And then, so like, I just think we are seeing a resurrection of fundamentals in crypto, because in some places things are growing in crypto and doing quite well. And the tokens seem to be following that and correlated with that. So we'll see if that continues. I don't know. Obviously, we'll still have a bunch of shit show and stuff in meme coins, but we're starting to see a resurgence there. Anyone think that that's going to change this year and get worse, or does anyone have a differing opinion, or are we starting to think fundamentals do matter here?
I definitely think fundamentals matter. I think it's just a less sexy investment, and it's not going to get you the 100x, which is unfortunately why so many people are here in crypto for that. So they're here for the wrong reasons. My question is, will these people actually stay and learn how to invest properly, or do they just rage quit? Because we see this in our community quite a bit, where people, they make a bet, they follow some meme coin, they lose big, and they leave. Right?
Yeah, I mean,
that's what I can't figure out. Do we just lose those people, or is like gambling and meme coins an onboarding ramp to a bigger investment portfolio in crypto?
There's always churn, right? Like you think of it like we have newsletter subscribers and we have a X% churn on our pro subs every month, right? This is how all businesses work. Same thing is true with finance, right? People come into this space, they want to invest or they want to gamble, they want to do whatever they want, use DeFi, and X% will churn. They will leave, they will not come back, but a certain percent will stay, right? And I think that just continues to grow and build over time. But definitely you're going to have people rage quit and leave.
That's just like, so like, I wish I could slap all those people silly, because if you are churning in your financial, like in the way you manage your money, like what the fuck are you doing? Like, no, don't churn. Learn how to become a long-term investor and build your capital base and do this the right way, instead of like taking massive bets and then quitting and then probably coming back in a few months and taking another big bet because you lost big last time. It's just,
the thing is, there's certain areas that have a lot less churn. Like once you use a stable coin and you're from outside of America, you're not churning. You never churn, right? The difference is when you use a meme coin and it gets rugged because of an Argentinian president, like you have a high churn rate. And so you just got to think of like, what are the industries, what are the sectors in crypto that are solving real problems? because when you create a product that has value, you have a lot less churn, right? It's like we run a media company, or sorry, we run a marketing agency. We have a lot of clients, and the clients that have really good products have really low churn rates. The clients that have really shitty products have really high churn rates. The same is true here in crypto. And I think that's one of the things you want to be thinking about is like, what use cases are being created here that actually solve problems in the real world? And I'll tell you right now, there's not many. There's not much, but there are few, and those things will just continue to grow. Even like stablecoins, other than obviously when Terra Luna collapsed, it obviously went down a lot because people were scared of stablecoins, didn't get it anymore. But like that thing started to grow back before a lot of like the stablecoin market cap started to grow back before a lot of the rest of crypto, right? Because it's solving a real problem. And so people are going to use that. And so I think if we can find the things that people are solving problems for, then those will be the things that make it long term and have less churn, right? Let me talk
Martin,
about
jump in.
Yeah,
I
you have
want
thoughts,
to
or
say something. What makes me even more bullish on fundamentals is that we don't actually need like more retail people buying these tokens. And now we don't
Yeah,
even need those people going directly to, I don't know, Sky app and using Sky app, because I think quite soon we will see emergence of AI agents who are managing everything for you. So maybe because you don't know which lending protocol you should use, which one is the best one out there, DeFi agent will kind of be able to analyze everything that's available, and they will use the best lending protocol for you.
Right.
So it's also like bringing more users to the best products out there. And then the next point, you don't even need the retail investors into these tokens, because if they are successful, they will generate a lot of money, and then the protocols itself will be able to do their own buybacks. And at some point, like those sophisticated players I was talking about earlier, they will start to pay attention and they will be buying too. So you don't really need like people knowing that they are using Aave or Lido or whatever. And you don't even need like people going to buy these tokens, because it's just like removing more dependency on these unsophisticated players in the space. And that's what makes me more bullish.
In meme coins, it's all about, you have to be early and you have to think who's the next buyer that's going to come in, right? And you're like, well, if this KOL tweets it, then, you know, a bunch of his followers will buy it. So if I'm in early enough, I'll get in before them. When you're buying fundamentally strong tokens, mainly in the DeFi sector right now, but that will continue on other areas. The whole strategy here, as Martin is saying, is look, it's very cheap to run a protocol. They don't have humans working for them, or at least not many. It's just an automated thing that exists on a blockchain. They generate hundreds of millions of dollars in revenue a year. At least some are starting to, and they can take all that profit and just buy back their own token with it, right? And so the net buyer, the next buyer for your tokens, is just the protocol itself. And you can track on chain how much they're going to be buying, and you can predict that out. You cannot do that in meme coins, right? So it's just such a big difference here. And if you're paying attention, you understand that it's a big leg up, because I think that stuff. Now, the problem was we never really got to have these token buybacks because of regulation or uncertainty in regulation. I think now we start to get that. And I think that's going to be a massive game changer in the way that we invest in crypto. And I think it's going to be a big deal. Let me bring up a thesis here that I want to talk about, because this kind of fits this area here. I'm going to just share screen. So I don't know if our listeners have heard of the FAT protocol thesis or the FAT application thesis, but I'll explain it real quick. And I just want to talk about everyone's opinions on this, on where we're at here. And so basically what we're trying to understand with FAT protocol or FAT app is, where does the value accrue in crypto? Does it accrue to the protocols, which would be FAT protocol thesis, meaning the tokens of the protocols get fat, they get a lot of value? Or is it the applications, meaning the value accrues to these applications, kind of what Martin was just talking about, and most of the investment capital goes into the applications, and so those tokens do really well. Since the beginning of time of crypto, it's always been FAT protocol thesis. And the idea around this was, well, if a protocol can attract a bunch of apps and a bunch of users, and it has its own native token, that has network effects, more and more people will use it, which means more and more people will buy it and hold it. And this protocol will just get bigger and bigger and bigger and bigger. It's kind of like if you think of like if the internet had a token, right? Everything is all on one internet. If that thing just had a way to invest in it, it would probably generate a lot of value, or at least you think it might. That has been the thesis for a while here in crypto. And I think it has worked. Obviously, Ethereum has made it up to 300 and whatever billion. Solana's over 100 billion, or at least was. It's probably not now as we speak. But a lot of these L1s have done really well. And there's always been this big L1 trade in the last 3 cycles, right? Even this one with Sui and Solana, et cetera. But what John Charbonneau tweeted out here was, hey, we're getting closer now to the fat application thesis starting to play out, which is this idea that because the applications own the users, that is where the value will accrue. Because when you own a user, right, or when you have a closer relationship to a user, you can start to tell the protocols underneath of you have the bargaining power, the negotiating power, right? And so we're already seeing it. L1s and L2s, what are they doing? They're racing to lower their fees all the time so that they can acquire more users and acquire more applications, right? And so if you think about an app that deploys on whatever chain, they're going to make sure that that chain is really, really cheap for them to actually deploy on it. So they technically have bargaining power because they are the ones with the users. And we're starting to see that play out. And a clear way to see this right now is just look at Token Terminal. These are the top 20 revenue generating entities in crypto. So 3 years ago, this was all L1s. There was no apps that were up here or even remotely close. Now, 14 of the top 20 are applications. So we're starting to see this fat application thesis play out. They're starting to generate more revenue, right? We've got Tether, okay, obviously, but then you've got Uniswap, Lido, Jito, Circle, Flashbots, Aave, Sky, Airdrome, PancakeSwap, Athena, GMX, Morpho, Venus. So pretty wild to see. Like 2 years ago, if you looked at this, it was all L1s and maybe some L2s actually back then. Almost no apps. And so we're starting to see apps really start to generate revenue. My question on this fat application, by the way, here's a nice picture of it to understand it. It used to be all the value going to protocols. Now it appears to be going more to applications, right? And so this is kind of interesting to see play out. And my question to everyone that I put out on Twitter, and I want to get your guys' opinion on this, was, okay, the fat app thesis seems to be playing out, right? More value is accruing to the apps, and that's because they own the users. But who are the apps in crypto? We often think it is those that I just shared on Token Terminal, the Aaves and the Uniswaps and the Sky, et cetera. But I'm starting to think that it's not them. And those are actually also just protocols. And instead it's Robinhood and it's Coinbase and it's Kraken, et cetera. Now, let me explain why. We just saw Coinbase integrate Morpho into its app, right? So Morpho was an app. It was the app, right? You had to go get a wallet and then go interact with Morpho. So that had the bargaining power over whatever chain it's on. If Base was not being good to it, if Base was trying to charge too much, it could leave and go over to Optimism or go over to Solana or whatever. But what's happening now is Coinbase, which actually has way more users than anyone does on chain, integrates Morpho. And now if you want to use Morpho, you just do it through the Coinbase app. So who owns the user in this instance? Well, it's Coinbase. And if Coinbase wants, it could also go use Aave instead of Morpho or Fluid or whatever competitor to Morpho. And so Coinbase can go to Morpho and say, hey, you've got to lower your fees for me specifically, or I'm going to go to your competitor, right? And of course, that's how it's going to play out. This is how the entire internet has played out. Most of the value in the internet has gone to the applications, Facebook, Instagram, Google, et cetera, right? It hasn't gone to the underlying protocols or the infrastructure, except for NVIDIA. But that's a whole different world. And so to me, it seems obvious that the same thing's going to happen here. But actually, the things we think of as apps in crypto, like your Aaves, et cetera, those are just protocols. Because the real apps, which could be the wallets or the exchanges, are just going to integrate into them. And that's where the users will remain. I don't think, and I've said this a billion times on the show, I don't think many users are going to come on chain and use crypto apps. I think they'll mainly do it from existing traditional Web 2 apps that will integrate in with these. And so my thinking here is, there's a few questions I have from this, but my first one is the fat app thesis really actually just apply to centralized exchanges and maybe wallets and not the apps that we see on chain? And we're some people are missing the point of that. What do you guys think when I say that?
I think you are missing the critical piece, which is, yes, Morpho might be replaced by Aave or anyone else. But the point is that these apps, the decentralized apps, need to have something more valuable than just one piece of code. that Coinbase can use. So think about Lido. If anyone wants to have a staked version of ETH, they should provide staked ETH from Lido because it has the most liquidity. It has like integrations everywhere. So it's not like Coinbase going to Lido and saying like, hey guys, you should reduce your fees for us because otherwise we are going to a competitor. No, there is no number one in liquid staking of ETH. There is Lido, which has an enormous market share, which has deepest liquidity, and everyone should use Lido. So these are the things that you cannot just compete on price because it's a path to death. You need to provide more value.
But don't
The
you
same,
think don't you think the Coinbase and the Robinhoods of the world, at least to retail, I think for institutions it's maybe a little bit different, but like the value that Coinbase provides is they're not just going to integrate Morpho, they're going to integrate, some DEX and like a bunch of other things. And so they've created interoperability. I can go on my one app and I can use all these DeFi protocols without having to worry about bridging and connecting in and all that stuff. And then they also they have a way better UX. They fix kind of the interoperability. You can do all the things in one spot. And then to be completely honest, I think a benefit that Coinbase has is you don't have to worry about self-custody, which I know is like a big thing in crypto. And that's like the use case. But the fact is like 99% of people don't want self-custody. They actually want the opposite because they're afraid they're going to lose their money. And so like there is a lot of benefits that Coinbase, for example, or any exchange provides to their users, right? Now, institutions may be different. If they're going to stake their ETH, I agree. They probably won't go to Coinbase and pay that premium of a fee because they'll go and figure out how to use Lido. But on the retail side, right, your average person, I'm not sure that more liquidity even matters to them, right? Like, because it doesn't impact someone that's putting in thousands of dollars. It impacts people putting in millions of dollars, right?
but users might like to hold staked ETH and then lend it somewhere, and you can lend staked ETH from Lido everywhere. So it's.
But okay, so Coinbase turns CB ETH or whatever their staked ETH version is on their app, and they allow you to do that in Morpho and take a loan against it, all in the one app. I got a feeling that's going to attract a lot more from retail users than if they had to go and do it themselves.
Yeah, but you are forcing them to use Morpho versus with that staked ETH, I can choose whatever I want, anywhere I want.
But does the average consumer want to choose whatever they want? Does the average consumer even understand what that means, right? Like, I kind of think no. Again, institutions, yes. But I mean, if you look at Coinbase's revenue, for example, it's like 80% of the revenue at least comes from consumers, like retail, not institutions. And so I just kind of think, at least on the retail side, which is obviously a fairly big market, like I don't think average people want to figure out and go and look around and figure out where the best risk reward is to get a loan on their ETH. I think they just want someone to tell them what to do, and make it easy.
Yeah, well,
I think you got to look at where this came from, right? Like, look at this screen that I just shared. It's hilarious. So like this came from the fat protocol thesis came from, hey, we're getting away from Web 2,
Yeah.
right? Like it used to be the application layer was the fat layer and the protocol layer got nothing in Web 2, right? And we were all like, great, blockchain is the first time that we're going to be able to capitalize the protocol layer because they're these interoperable, they provide value, the applications need them. And I think we're going to end up somewhere more in the middle. I think we will still, I agree that applications are going to get fatter and that I agree with your thesis, Kyle, but I also think the protocols are going to provide, they will continue to provide value more than they do in Web 2. And so the protocol layer will also do well. I think it's going to be like more in the middle of these two long term, as opposed to it being like it is in Web 2, where protocols basically get nothing.
I don't know. The thing is, there's just so many L1s and L2s launching now that like there isn't much of a moat anymore. I think the value is really going to applications moving forward. There's some value to protocol, like obviously better than a little bit, but like, I don't think it's middle. I think it's way, way, way heavy to application side. Now, what I don't know, and Martin, you make some good points. It made me think like institutional demand for apps will be the Aves, the Uniswaps, the Skies, because they don't want to use the exchange. retail demand is probably the Coinbases and the Robinhoods, et cetera. And so maybe it's both. And so you could see them all as apps. But I think most of the value is going to go to these apps. And I think these smart contract platforms are going to turn into commodities essentially.
But is this a good thing if all the value goes to the apps? Because as an investor right now, you can invest in different ones, twos, and so on. If we have a monopoly of Robinhood and Coinbase, is that a good thing? Because it's basically just what we have in Web 2 with social media.
Agreed.
And it doesn't mean the user data, it gets sold again, and we don't own our data anymore, which was a big advantage of Web3 so far. So I hope we will see some front ends Web3 native, basically. And I know there are some apps being built.
Yeah, look, it's not a great thing. You're right. Although I think it's a necessary thing. I think, and actually, John, this tweet here, here's what's interesting. He goes, okay, fat protocol thesis. We saw that play out already. We're moving into fat application thesis because the apps own the users. And so we're starting to see apps and the exchanges generate a lot more revenue. And then he goes, then it's fat user thesis, which in my opinion, this is when the users, like, we need to onboard people to crypto. We need them to probably use centralized companies first because the UX is better. It fixes interoperability. You're not afraid of, you don't need to worry about seed phrases and all that kind of stuff. But eventually,
you don't need something like that for that. You can do it in Web3 native as well. You can log in with your Google account or something like that.
I know, but it's very, like, it's super niche. It's not there yet, right? Like, I just think what's happening here is most people will be onboarded via exchanges, right? And then eventually, when people get smart enough to have, and the tech gets good enough to have your own wallets, and self-custody is not about seed phrases anymore. We've fixed that problem with ZK or whatever. Then I think people start to realize, oh, we actually have more value as the user, and we can just go and use these applications on our own. I can just go connect into Morpho or whatever. But I think we're probably years and years away from people doing that. And so I think this is the right sort of journey, which is, hey, we're all going to start to use crypto, but we're going to do it through centralized companies because they're going to create the good UX. And then hopefully, this one I'm still unsure of, hopefully people learn enough that they can go and do it their own way without that. Although I would say, even if this does happen, who set up the best to do well here? That's the wallets in this world. And that's Coinbase and Kraken and OKX and Phantom and MetaMask. So like, it's still centralized companies are the ones that own all the wallets, right? So I think we're a long ways away from it not being controlled by centralized companies, which, by the way, this is obviously, if this plays out like I'm thinking, it's obviously bullish Coinbase, Robinhood. That's kind of all you can invest in this world right now. Kraken will IPO soon. But I mean, as Martin kind of said, institutions will still go direct to apps. And so like still bullish a lot of apps, of course.
Quick break from the episode to tell you guys about a product that I really like. I'm talking about crypto.com cards. These are a great card to spend your on-chain dollars and get rewards on-chain. There's no annual fees for their cards, which is great. You get cash back, not in fiat, not in USD, but in crypto. So you build up more, you're stacking more on chain, which is great. There's also a ton of perks, Netflix subscription, Spotify subscription. And if you get certain levels of the card, you can get lounge access. Like me, you travel, lounge access is great. Check out the link in the show description and get your card today. Let's get back to the boys, the Milk Row Pro team.
I mean, isn't the takeaway from this, don't invest in L1s? Like, no.
Well, so that was my actual,
you know what I mean?
This
like,
is my next question. This is my next question. Right now, almost everyone's portfolios are 80, 90% L1s, right? At what point does that need to flip? Now, I know that's extremely risky, and I'm not saying anyone do that. We are all about majors, though we do include Coinbase as a major recently in our portfolio, right? And I consider that a major. And I've been buying more of that, and my percent of my portfolio has been more and more Coinbase, which is technically an app. I think of that as an app in crypto. Now, no other app has a meaningful portion in my portfolio, and I'm wondering at what point does that need to change? Because if this actually is playing out, which a lot of people do agree with, now I don't know, does it play out to the exchanges? Does it play out to the on-chain apps? But at what point does our portfolio need to reflect that? Anyone have a thought there?
As soon as the popular apps get tokenized, something like Pump.fun or Polymarket, they are not yet.
Yeah. But do you think it's still just too early in the journey of the fat app thesis that upside still is just makes sense, risk adjusted on the on the protocol side?
I think it is, yes.
Yeah.
But in the beginning of the episode, we were kind of shilling fundamentals. And the more the fundamentals are like major role in this industry, in this market, I think the more we will lean into apps and like less layer ones, more apps. So I can see some correlation there.
There's also, outside of Solana, no other chains really have strong fundamentals, yet they're valued at insane valuations. I think at some point there's going to be a repricing, and L1s are going to, I don't know if they're all going to come down like crazy, or just everything else will be repriced much, much, much higher. Like right now, L1s, you launch an L1 and you're immediately like a $10 billion token, right? But you launch an app and you're like, I don't know, you're maybe hitting $1 billion if it's really got traction. And at some point that divergence is going to change, and L1s might either come down or just remain, and then the apps become valued much. I don't know if it's higher or the same or whatever, but at some point that's got to switch.
But so far it was like that because VCs invested in L1s and the pre-market valuations were extremely high.
Yeah.
I think Hyperliquid is a pretty good example here because they were, they look at the market and they were saying like, okay, all people are trading on centralized exchanges. Why is that? Because of the user experience is much better there. So they built their own customized layer one, which is now competing with the user experience of, Binance, ByBit, those centralized exchanges. And they are getting like more people there because they are enabling the same kind of experience, but on chain. So you are still owning your funds. You don't use any custodian like Binance or someone else. So it's showing the playbook. Crypto is always struggling with user experience, and we were just talking about there are great products like Aave, Maker, Lido, those guys, but we struggle with user experience because I don't want to download MetaMask, go to this website, then go there to do something else. I don't want to do that. So like, what if anyone else just copy paste kind of Hyperliquid approach and say like, hey, DeFi is fucking great. Let's just build one huge, great user experience, which will enable me to do swaps, to buy meme coins, to trade, to lend, to do everything I need from one front end. And this will be the winner. And like, maybe then the idea, the thesis behind, okay, Coinbase, Robinhood, these will be the winners, can pretty quickly change. And it can become that maybe Infinex, I don't know, like someone else doing this thing. Because then if you are just front end without any kind of other motives to, I don't know, kind of push your products, Coinbase might be pushing their own products and for the cost of not providing the best products available to the users. And if this front end is only, hey, download this app, we know it's a one additional step you need to do, but you will experience the same experience you can get on Coinbase, Robinhood, etc. But we guarantee you get access to the best products out there because we are not pushing our products. It will be just using kind of aggregators. So you want to do swap, okay, here's aggregator, and whoever is getting you the best price, that will get your order and you'll get the best execution. Will ever Coinbase be able to offer that? I'm not sure. They might have their own motives to not do that.
I think from an investment perspective, I do believe that the apps have a bigger opportunity right now than the protocol layer, just because the protocol layer, I think you're right. I think it's in for a correction in some way, as you said, and apps aren't there yet. But the hard thing is the risk reward of investing apps is also greater. So I think like there is protocols that have moats and have network effects that can make you confident in risk reward. So like it's almost like we need like an index of the apps. If I could invest in an index of the apps, that's the best. There, I would love that investment. I feel pretty fucking good about that.
That's a
But
sick
maybe
product.
longer term, Because this cycle, I think, or this year, it won't play out like that, and the protocols will still accrue most of the value.
Yes. Yeah.
That
Timing
that
matters
is a good
there.
point. I was going to say that. I do think, like, for those listening, this doesn't mean you should dump all your L1s right now and like your ETH and your Solana. I don't think that's a smart move. This isn't happening today. It's just a trend over time. I would imagine if we had like a chart of like market share and it was like L1s versus apps, or L1s and L2s versus apps in terms of revenues and in terms of token price and market cap, like you're starting to see apps take up some market share slowly, and that'll kind of pick up over time, but probably over years, I would think. Not like, yeah, I don't know how long that takes. Yeah, that's interesting. The game's going to change. That's the key thing we're trying to say here. Is it's not going to be as easy as just buy the most popular L1 and let it ride for forever. Things are changing, but man, that's a sick idea. We should tokenize an index. There's a bunch of protocols you can do this with, of like the apps that we're most bullish on that are generating the most revenue, and make that a Milk Road product. Who wants that?
Or
If you
just
want
build
that,
Who
hit
wants
the
it?
comments.
Let us know if you want it.
Or we should just build that front end and like connect all the great apps there and just let people.
We'll just go and build that. That'll be so easy,
Yeah,
Martin.
yeah.
When we get off this call, I'll just go whip it up. Don't even worry about it. We'll just take over Coinbase just like that.
That's the spirit.
All right. What else do we got on our list today? Let's talk about AI before we wrap up. So Grok 3 was released yesterday, and it's a freaking beast. If anyone's had a chance to use it, mainly, let me pull up a chart. What we're looking at here is each of these like LLMs that we have, whether it's Grok or DeepSeek or Gemini or Claude or GPT, whatever, they basically have like benchmarks or how well they score on different things. So one is on math, one is on science, one is on coding, etc. We just had DeepSeek come out. Was that like 3 weeks ago now? Maybe, I can't remember. And it dominated everything. And now you have Grok 3 come out, and it is absolutely dominating at all of them, even DeepSeek and Gemini. And it's literally winning on every single metric. So I don't know, pretty wild to see this. And I just wonder, like, what are we doing here? There's just like every day or every week, the new one comes out, it upgrades, and it's just better and it's better and it's better. And like, where does this end, or what happens? Martin, I know you've done a lot of research on this. Do you want to just like walk me through your thoughts on what's happening here and why is this relevant?
I think the progress of AI models is just insane. And yeah, as you said, like a couple of weeks ago, we saw DeepSeek Air 1 model, which was competing with OpenAI O1 model. And we were like, wow, someone finally cracked the code and were able to, deliver such a good AI model. And now Grok did the same thing. So it's like already, the level of what you expect from the next AI model from the next future generation is just like going up and up. And we are already pretty close to this AGI kind of thing where it's already like much, much smarter and better than the human, basically. So, and also interesting thing is what's the moat in AI these days? Because at some point, like everyone was so bullish on OpenAI because we all thought that they have the best know-how, the best people, the best just team to build it. And then all of a sudden, some Chinese liquid fund built something very similar. Now Grok did the same thing. So it's like, okay, so is know-how the moat? Because it feels like it's not. So what is going to be moat in AI era? And it feels like for some time it might be access to the computation, to all these GPUs, because Twitter somehow managed to get I think about 200
or 200,000, yeah.
200,000 NVIDIA cards, which is insane. But it sends the message to the rest of the world because everyone is competing to have the most performant AI model. And if now Twitter has priority access to the newest chips from NVIDIA and not OpenAI, not Facebook, so they will be like, fuck, okay, so we are gonna have less GPUs available and Twitter is gonna have advantage. So we really need to double down on our internal development and we need to really kind of build our own chips, so we are not dependent on NVIDIA, which is first supplying, I don't know, Twitter, maybe then there's going to be Bezos or someone else, and then maybe we, but it's going to be maybe late. It's kind of interesting
I don't
play
think
here.
that so one, I think the moat is resources. You're right. This is why the names that we're saying are from the biggest companies in the world, right? It's Google's AI, it's Elon's AI, it's OpenAI's AI, and this is it, right? Like, no one else can really compete, although DeepSeek managed to jump into the mix somehow. But in terms of NVIDIA, I don't even think other companies can compete to innovate and create what they're doing. Because one, they're kind of like Tesla, where they built everything in-house, and even the things that they didn't build in-house for the GPUs, they went to those factories around the world and redid their entire model. They're like, here's how you guys are going to fix your factory to be more efficient so that you can build the chips that we need. And so their whole production line is controlled basically by them. And it's as efficient as it can possibly be. That one is really, really hard. There's a network effect that NVIDIA has. It's kind of like what Tesla has, why Tesla can create the best cars in the world for such a cheap price. No one else can compete on that right now. And it takes you years and years and years and years and a lot of effort to ever do that. The other thing that NVIDIA has that no one else has, that none of these other companies will do, is NVIDIA launches their newest GPU, whatever it's called. They already are 3 cycles ahead on research. They have a full research department that is already building out the next chip, and the next chip after that. And they basically release, it's like, they have 3 new chips that come out every single year, and they've done this for forever. And so every year, analysts come out and say the margins of NVIDIA are too high. Companies are just going to create their own, and no one can ever do it because no one can keep up with the pace that NVIDIA is innovating at. So I really don't think that they stop anytime soon. So that's, I mean, their mode is just their like willingness to keep innovating, NVIDIA. And then I think everyone else's mode is just resources to buy NVIDIA chips.
But there
Which is
are risks
wild.
that at some point we will find a new way how to train these models, and you might don't need to require as much GPU as we do
Yeah.
now.
Which
So
is kind
then,
of what the DeepSeek thing showed.
yeah. So then,
That is the risk
what's
for
the
sure.
mode?
Yeah, then I don't know.
So it might be the data, because like,
Right.
where do you go for information? I am constantly on Twitter.
I go to
because-
Milk Road.
Yeah, sure. But like, Twitter is such a good vehicle to communicate new things and ideas and stories. And like, so they are really in a good position to have a good
Yeah.
model, I think.
Yeah, I agree.
Another mode will be the user experience, because so far none of them is perfect. And Twitter's grok, you have to be on Twitter all the time. But if you're writing an article, for example, it's not perfect to have to switch to another website all the time.
But that all
Yeah.
comes off data, right? The user experience
Sure.
is just like your ability to go, and it's all chatbots right now. The UX is the same on every single model. The output of the models is all reliant on, I guess, data and the ability to compute that data. So I think it's data, right? Because like you can go and create something cool with your data, create some cool new product, and then just they're all going to copy it tomorrow, So
And one more thing, like when OpenAI released their deep research agent, I was like, okay, I need to try it out. So it's $200 per month, and it's really super powerful. You'll just get it like, hey, I don't want to do research about ZK and what's happening there, and it will give you like 15 pages report with resources and everything. So it's just insane. It saves me so much time to do research on my own, and I was willing to pay $200. But now, like a week ago, Perplexity announced Deep Research too, so it's kind of similar to that, and it costs like $20. Now Grok announced also Deep Research, so like, something I was willing to spend $200 a month 2 weeks ago now costs $20, and maybe I can find it even for free somewhere. So it's like, it's just insane. Something that's so valuable to me that at some point I was willing to pay money, and now the costs within a few weeks are just dramatically increasing. It's
Okay, riddle me this. Let's go back to the crypto world for a second here, but apply it to AI. AI narrative completely wiped out over the last few weeks in crypto. we're talking about how elite these companies are. Data is the moat, resources are the moat. Nobody in crypto AI has even remotely close to the resources that OpenAI and Twitter and all them have. Okay. So we know we're not competing in resources, et cetera. We're just tapping, usually what everything in crypto AI is for the most part is just tapping into these existing networks. Does value accrue to the AI crypto world? And why would it? Why not just keep putting money into Microsoft, et cetera? What's the reason to put it into crypto AI? And then one other question, maybe you want to apply it to this, is does this mean it's it for AI crypto, or does this stuff bounce back? And if it does, why does it bounce back?
Yeah, I mean AI in crypto, like let's use this deep research example. Now I can ask about ZK and it gives me pretty good answers. But what if I'm interested about analyze, I don't know, Aave for me? Can it go on Etherscan or Dune or somewhere on the forum to read and post, or like go on Discord and give me like the full thing? No, it's not. So what if I just
Why can't it? It seems like you just connect an API in, and then I can do that pretty easily.
No, it's not that easy. Like you need to kind of tailor, like customize it for your specific use case. So even right now I describe it's already very powerful, but it for a general kind of idea to do research. But if I'm in crypto, I might be more inclined into crypto research. So I would expect that if someone is doing research for me, it has the skills and know-how how to use
Right.
Dune, token terminal, Etherscan, Discord, like everything. So like you can see some specific use cases.
You know what's funny is you just said the app thesis. The OpenAIs and all that, these are protocols. They're getting cheaper and cheaper, as you just said. And people are building on top of them, right? Like you want to build an AI, you just connect into OpenAI or Twitter, et cetera. And you build a use case that is niche, specific to a certain audience, like crypto, like what Virtuals is doing with investing and like understanding on-chain metrics, et cetera. And now you've created a product, an app that people can use. And so it's almost like, is that the app thesis, fat app thesis playing out in the AI world as well, where like, why put your money over at Microsoft or OpenAI, because their costs are just getting more and more, and yet the amount they're charging is getting less and less if they want to compete. And so then those that are building the real use cases, which are just apps, creating things, there's value accrue there, which some of those might be in the crypto world.
But in that case, it's very hard to invest into the specific apps because there's just so many.
Yeah, agreed.
That's why we need marketplace for them. So like the ultimate goal will be just API. And like I am going to sell my crypto research agent to the marketplace, and it will run multiple tests with everyone else who is competing in this same sector, and it will evaluate the performance of my agent, someone else's agent, and then if someone is using some AI model, it will go into the marketplace, find, okay, this user is asking something about crypto. What is the best agent to answer some questions about crypto? Hey, based on the outputs, which are automated by the evaluations test, your agent is the best one. So use that one.
It's like an aggregator of agents.
Yeah.
Who's building that? That sounds kind of cool.
I think kind of BitAnswer is doing that, but
I'll just go build it up. Why don't we just do it, Martin? You want me to just go? No problem. I'll just go do it after lunch.
Virtuous agents, for example, Luna can already do that. She got the task, or she wanted to create a picture for a social media post, and she was then communicating to an agent that could create the picture for her, and she paid him. But in that case, it's a closed ecosystem, and it's whitelisted which protocols and which other agents she can use.
Also, like next generation of OpenAI model, it's going to be just the router which will decide like, okay, for this task you should use this O1 model, for this task you should use our GPT-4 model, because everyone is better in different things. So that's where we are heading.
Companies are going to just look so different in a few years from now. Like when you can get all of your finances and value on chain, you basically make your costs to do finances globally zero. And then you can start to get AI to run most of your administrative and even innovative and coding, et cetera, things. It's like, there really is, we're going to a world where you're going to have billion-dollar companies with one employee. You know what I mean? Like where these companies are going to get so damn profitable
one
because they have
real
no expenses.
employee, one
Yeah,
human,
one real employee and then a
one
bunch of
human.
bots.
You're gonna have actually a lot of employees. They're just
Yeah.
digital employees.
We're going to a crazy ass world. Well, that was fun. Anyone else have anything they want to wrap up on?
I think that like, just to answer your question of like, does AI crypto make a comeback as we see it right now? I think we're in a couple different phases. I think from the speculative casino phase, I still think AI crypto has a run this year.
Yeah.
It's like AI's narrative is too big. There's everybody wants to invest in it. It's very difficult to invest in right now. Okay, there's going to be a lot of speculation within crypto. So I think that makes a comeback. And then I think long term, I do think that there will be a lot of decentralized apps built on crypto rails that use AI that might even be AI based apps. They're just built using crypto because that's how the founders want to raise capital and that's how they want to build. And so I think there's a long life cycle of crypto AI still to come. The bubble burst on the first one, but I think that's just the way she goes.
It's also just like everything is going to use AI. It's like the internet, right? Like we used to call them internet companies and now everything is just a company that uses the internet. I think all companies are going to use crypto and all companies are going to use AI. We're sort of merging into that very quickly, in my opinion. And especially with the regulation with Trump, I think the deregulation, that's going to push that even further, right? Like you even see it with our company, a lot of our a lot of our finances is moving on chain. A lot of our team is using AI. Like we're starting to think about building AI products, but more importantly, we're just using AI to make our existing products even better and more efficient. And so like you would assume every company is doing the same thing, right? So it's pretty wild for both technologies, I'd say. Cool. Well, thanks guys. That was a lot of fun. We'll do it again next week.
Thank you, guys.
Thanks, gents. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.